Good greeting to all of you watching this video. This is Mohsin Azam Khan here, a finance lecturer and an educationist. This video is about investment banking. I will be answering the question, what is investment banking? I feel in today's world investment banking is an important factor because it drives investment into an economy. This video is very beneficial for students in CFA, ACCA, CA, CPA, MBAs or any other students who are planning to have their careers in finance. Before starting with the video, I would like to quote Benjamin Franklin here that an investment in knowledge pays the best interest. Let's move on. Firstly, we will open up the functions of investment banking. There are primarily four functions of an investment bank. Number one, capital markets. Number two, advisory, that is mergers and acquisitions. Number three, trading and brokerage. Number four, asset management. Further on, we will look into the details of each function. The first function of an investment bank is capital markets. Let's suppose you have a small company, a private owned company, and you want to sell part of your shares to the public, which is an initial public offering, which is an IPO, so that you can enlarge your business and become a bigger business and reach bigger market. In order to fulfill an IPO, you will have to contact an investment bank. Investment bank provides you different arrangements through which it connects you with the investor and sells your shares in the investor side. Either they will offer you a best offering arrangement, either they will offer you an underwriting arrangement. Plus, if a company wants to sell their bond in the public, again they will have to contact an investment bank. Again, investment bank connects the seller of the bond with the investors. This is small capital markets function. Let's test your knowledge. I'm coming up with a question for you. Think about it. What was the largest global IPOs of all time? Do you know the answer? Answer is Alibaba, a Chinese company with a staggering initial public offering of $25 billion. In other words, they sold their shares to the public for $25 billion, highest of all time. Ranked number 8 is a very well known Facebook, which raised up to $16 billion. The other function of an investment bank is advisory, that is mergers and acquisitions. For example, there is a company X and it wants to buy another company, company Y, so that it can become a bigger company or a better company. In that case, the acquirer is company X and the target company is company Y. So the company X will go to an investment bank into the advisory section and will ask for their advice whether to buy company Y or not. Therefore, they will hire a buy-side investment analyst from the investment bank. Whereas from the other side, company Y will also approach the investment bank, the advisory function, and will ask for their advice whether shall they sell themselves to company X or not. So they will hire a sell side investment analyst. The objectives of both buy and sell side are different. Buy side objectives are that they provide a strategic advice to company X whether to buy a company in the same industry or another industry, a small company or a large company, what company to buy. They provide a valuation as well, that what value shall they offer for the other company. Therefore, for that purpose, they use different valuation models that you must have studied, such as free cash flow model, such as dividend discount model, Gordon growth models, price multiple model, comparable models, different models. And the most important thing for the buy side analyst is to estimate synergies. What amount of synergies will add up to the value of company X? So he will have to calculate that as well. Whereas on the other side, a sell-side investment analyst has different objectives. He has to find good bidders who quote good price for his company, prepare the target well. While finding good bidders, he also have to see the combination through which the payment is being made to his company. For example, if let's suppose company X is buying company Y, company X can offer the payment in full cash, or else they can offer the payment as a combination of their own shares and cash. So the sell side investment analyst has to decide which is better, a combination or entire cash. Plus, sell side investment analyst also will have to provide a valuation for the company Y, as what quote would be good enough to meet their value, and he coordinates the entire sale process. I hope you understand this advisory section as well. Let's test your knowledge for this as well. Answer this question. Largest acquisition of all time. Any idea? This is Vodafone. Vodafone is a telecommunication company. Vodafone acquires Mannesmann AG for a value of $180.95 billion, making the takeover the largest merger and acquisition deal in history. This was occurred in 1999. Here comes my favorite function, which is the third one, trading and brokerage. In this, the investment bank goes through a proprietary trading, that is, using their own money to buy profitable trades. So the bank uses its own money to buy different securities such as shares, bonds for a short term, and then sell them at a later stage to multiply their money. This is a very good income for an investment bank, and they earn a lot from this activity. Number second is brokerage. Brokerage simply means buying securities on behalf of the clients, not by their own money. They charge commission on each buying as their income. Third, in brokerage and trading they do is called market making. Investment banker or investment banking buys illiquid securities which is not easily available for customers, and they keep it with themselves, so if any customer wants to buy them, they can easily sell to them with margins. So they earn a lot with the bid-ask spread. For all of this to happen, the research department or the research team in the investment bank plays an important part in deciding profitable trading for banks. Therefore, research team consists of highly skilled CFAs, highly skilled persons who have good in-depth knowledge of finance, of international markets, of domestic markets, of valuations. So they have good skills. Trading and brokerage accounts for the largest part of revenue for pure investment banks like Morgan Stanley and Goldman Sachs. The last function of an investment bank is asset management. Asset management is about using money to make more money. So investment banks offer this service to their clients, that they will manage their assets for the funds they offer. So a client goes to an investment bank, he gives them funds. In return of those funds, investment bank buys different stock, bonds, real estate, other investment. In other words, buying different assets for the client. They pool these different assets together and design a portfolio for their client. Portfolio of different types such as mutual funds, specific portfolio for the client, or other funds. So basically, client is giving them money so that investment bank can buy assets for them and manage those assets. Before designing the portfolio or choosing different assets for the client, they have to see their needs. They have to see their income needs, whether they want income annually or not, whether they want income monthly or not. If they want income monthly, then they will prefer dividend paying stocks in the portfolio. They will see the risk tolerance, whether they are okay with risky assets or they want less riskier assets in their portfolio. Length of investment also matters, whether they want long-term investment, then you will focus towards potential growth stocks. If they want short-term investment, you'll have to focus on to those stocks which can give good return in short term. Question arises here: why would a person want investment bank to make investments and manage investments on his behalf? Answer: because investment bank provides decision making, well informed decision making, meaning the client himself does not know much about the market itself. He does not know much about the stocks. He does not know what stock is good for him, what stock is bad for him, what bonds are good for him, what bonds are bad for him. However, because investment banks hire professionals, well-trained professionals who have in-depth knowledge about financial markets, such as CFAs, ACCAs, CAs, who have good grip on the financial markets, they can make good decisions for their client. Number two, investment banking has a great research team which comprises of great individuals who do in-depth analysis on different assets in the financial markets. 3. Investment banking also does hard work in understanding your needs, understanding the client's needs, and as per client's needs, they are buying assets and managing them so they can give good returns to their clients. So the aim of asset management is simple. You go deposit $5 to the asset manager. That asset manager will make sure or will try that he buys certain assets in return of those $5, and with time he will try to make those $5, $100, $200, $300. So instead of depositing those $5 in a conventional bank, you are depositing in asset management with an aim that those $5 will rise up in coming time. The roles in asset management are of three kinds. There is a sales team which convinces different clients to come and invest their money in asset management. Number two, portfolio managers, which is the vital team in the asset management. These are managers who are responsible of designing a portfolio, of taking decisions as what assets to buy, what assets to sell from the portfolio. Third is the team which supports the portfolio managers by providing them in-depth analysis so that portfolio manager can take an informed decision. Knowledge. Let's understand pure investment banks. Pure investment banks are those which only offers the four functions that we have studied. They don't offer the functions of a conventional bank, that is using deposits and giving loans to clients. Currently, pure investment banks are Goldman Sachs and Morgan Stanley. The other category are called universal banks, which is a combination of investment bank and commercial banks that have conventional bank features as well plus investment banking features as well. Those examples are of HSBC, Bank of America, Deutsche Bank and JP Morgan. Here your video ends. Thank you so much for watching this video. Do like my page so that you keep getting good informative videos. Inbox me for any queries. My CFA classes will be starting from July. You may email me related to any subjects mentioned below. I hope you had a good time watching this video and must have understood the dynamics of investment banking. In other words, investment banking tries to increase the value of your money. Thank you so much, guys.